on the insurance pack, and I think that's coming in from Yash. I think we'll get to that in just a bit. We have the management of Mahindra and Mahindra who's joining in right now to help us out with the numbers that just came out a very short while. We have Mr. Jejurikar who joins us on the show. Hi, sir. First of all, happy Dhanteras, and wishing you, your entire team, a very happy Diwali as well. Well, let's start off with a couple of basic details. We have a disclosure that comes in on the SUV market share for both, from Maruti as well as for you all for the SUV segment. And we wanted your clarification out here with regard to that, because it appears one is talking about volumes and one is talking about revenues. So tell us, because as of now, the details that we have is it appears that Maruti has gone a little bit, there is some movement on that front. Please go ahead, sir.
Yeah, so clearly, firstly, we are very happy with the Q1 results and the momentum that we see on the SUV business. We have over 280,000 open bookings still, even as we ramp up. So, over the month of September and October, we've crossed a volume of 42,000 in each of the months. So we've seen a very strong ramp up over the last few months. To your specific question on SUV market share, because our products are at an average price point higher than most of our competitors, we thought one of the ways in which we better represent our performance is revenue market share, because our average price points are significantly higher than those of our competitors. Given that, hence we've started reporting revenue market share, and that is the number that you see for us. Yes, in the current quarter, Maruti, the competitor you're talking about, has inched ahead of us. There's a minor difference on revenue market share. We are hoping by Q3, which is starting October, we would be able to recoup that as well. The gap on volume market share is, is a different story because it's a different product portfolio, and hence we would like to keep our primary metric of measurement revenue market share. And that, as I mentioned to you, is a very small gap between the two players in Q2.
Okay. Mr. Jejurikar, hi, good afternoon. Prashant here, and again, season's greetings. Is that the race to track now? The SUV market share race between Maruti and M&M, as you put it? You would try to, of course, come out on top. But what would it entail? Because that is the segment which is growing very well. The lower end is not doing well. The SUV segment is where most of the growth is, and pricing power, etc., has been. But as competitive intensity in that segment picks up, not just from Maruti but others, what would you have to do to stay on top?
Yeah, so firstly, Prashant, off late, the SUV as a percentage of passenger vehicles has now crossed 60%. It's been above 50% for a while, but has now crossed 60%. So actually, SUVs, like you said, is now a significant part of the passenger vehicle market. If that, be that as it may, we would, of course, expect competitive intensity, and there is competitive intensity with every player, having a strong SUV strategy in the automotive business in India. We, believe our performance is very strong, given that we are selling 42,000 plus vehicles, and we still, in spite of that, have an open booking of 280,000. So it's really a question of, as we said, how do we continue our ramp up? We had shared our capacity expansion plan, where we had said that we would, by the end of the financial year, get to about 49,000 SUVs. We are currently halfway there. We are at about 42,000 a month by way of production. But we can still move up, and we still have a large open booking and a very strong momentum on our brands. So really, we believe our strength is our differentiation, our authentic SUV strategy. Our products are selling at very good price points. The average price of an XUV 700 is about 24 lakhs because 70-80% of the demand is for the highest two versions. So we believe that we will continue this momentum, given that our brands have hit a strong sweet spot. There may be months or quarters when someone is, a little ahead or not. That's part of a competitive scenario.
Okay. Mr. Jejurikar, hi, good afternoon, and, wish you a very happy Dhanteras, happy Diwali. This is Surabhi. Before we talk about tractors, which anyway has been sluggish for the last several months, just to complete the picture on the auto segment, I believe realizations have been a little lower than at least some of the estimates on the street. So can you give us a sense in terms of, what's happening with pricing? Is there price elasticity, or now that the competitive intensity is increasing in the market, that could no longer be perhaps a lever?
No, we have been taking price increases, Surabhi, pretty aggressively. We, just as a context, we moved to BS 6.2 a few months back. We passed that cost on as well. So, when you look at average realization, it's also going to be a function of what is the model mix. And within products, what is the product mix? So, different analysts would have a different set of estimation on what of our products are selling. But we are on track with our revenue realization. And as you can see, our margins for auto standalone, which we put out, have actually now got back to F19 level. And if I was to put that by way of context, we've seen 3 years of rapid inflation where material cost has gone up significantly. We've now passed on all the material cost. However, as you understand, when you look at percentage margins, unless you are able to pass on more than material cost, that means you pass on the margin as well, your percentage margin is going to come down. So we've basically managed to now cross our F19 margin, which really, for most analysts was the benchmark margin. And we've done that by really rationalizing the rest of our cost structure. So for us, the revenues are in line with what we would have expected. Analysts may have a different version of model mix because a lot of the revenue calculation will be based on projected model mixes.
No, but in terms of just, a projection, I got that, Mr. Jejurikar, in terms of this quarter. But as you talk about the outlook, again, going back to that point of heightened competition, particularly in the SUV segment, will the elbow room diminish in terms of taking any further pricing actions?
Our products, as you know, Surabhi, are very different than those of our competitors. So we may be playing in the same space, but we play very differently. We play with the product portfolio, which is far more authentic core SUV. That's the basis of our differentiation. And we don't necessarily have to compare our price points with some of our competitors because the products are very different and our customers buy us for completely different reasons than what they may be buying some of our competitors for. So, it's not a head-to-head comparison on pricing when we look at it. When we look at pricing, what we look at is what do we need to do to keep our brands aspirational, but yet accessible to customers. And that's the sweet spot that we try to navigate and balance. We don't look as much as at competitor pricing as much as what we think is the right price for our customers.
All right, Rajesh, I wanted to ask you about the tractor segment. I think earlier this year when we were talking about single-digit growth for the industry. Now, is there a change out there? Are you expecting a flattish number for the year?
Yeah, so we had said low single digits, if you recall,
yes,
through the course of this year. And we had said that for 2-3 reasons as we started the year. One was last year was a very high base, 950 or 1,000 of industry is a very large base. We had seen significant growth over the last 2-3 years. The second factor we had said, and as odd as it may sound, is last year we had seen 2 Navratras. So there was a second Navratra, as we call it, especially in the north, which was in the month of March. So a lot of when the Navratra happens in April, then you are going to see a momentum in that financial year. But this time that got preponed to March, so it went into the growth of last year. So that inflated the base of last year by about 25,000 industry size, right? So when we went into the year, we went in with this knowledge that, the industry is going to has seen a preponement because of Navratra from April to March. And that is going to affect the industry size this year, which is why we've kind of keeping these 2 factors in mind, kind of said that let's go in with a view of low single digits. During the course of this year, of course, we've seen, not a very good dispersion of monsoons, while the overall LPAs are not that off normal. The southern states in particular haven't got the right intensity and the right dispersion of rainfall, which is, implying that some of the states like in South and Maharashtra are slower than what we would expect. And which is why, we're at the moment making a adjustment, which is not a lot, which is from low single digits to flattish.
Mr. Jejurikar, just to go back to the overall picture, and you mentioned margins on the automotive segment. They've gone back to F19, but I guess on the street it's always ye dil mange more, right? So at a blended level, you're at about 12%, if I have the numbers right. What is the outlook, putting everything together in terms of margins for FY24, then getting into the next year?
Yeah, so when you say blended, you mean auto and farm together, right? That's probably what you mean.
Yes.
Yeah, so when you look at blended margins, you have to realize that that's a mix of the margin profile of auto and FES being very different. So if the share of auto in the overall revenue goes up, the blended margin is going to be lower, obviously, because there's a different weighting of the revenues. So that's what you start seeing. So, we would advise you not to look at blended margin because it doesn't really give you a picture of the nature of the business. You see the auto margin separately, you see the FES margin separately. They will tell you a much better story than doing a blended, because the blend is a function of if auto is going very rapidly like it is at the moment, and the average margin in auto is whatever, let's say 7.9, and the average margin in core tractors is 17.5, then obviously you're going to see an impact on the blended margin.
So sure, so let's talk
really,
segment. Let's give an outlook.
To look at it.
Sure, sir. So just quickly, I mean, an outlook segment-wise, then that would help.
Yeah, firstly, we don't give outlooks on margin, you know that. So, we're not going to be able to give you a guidance on margins. What we always advise, anyone who looks at us as a company, investors and otherwise, we have a track record of what we've been able to deliver. We had said that we would improve auto margins over a medium term by over 300 basis points. We delivered that way ahead of time. There were questions on when will you get back to F19. We are back, we've crossed F19. So I think look at our track record and make a projection. Likewise on the tractor side, we put out a slide a little while back when we did the media on what we call stability and volatility. So even as the industry over several quarters may move up or down, we've managed to keep our tractor margins within a 2% variation band. That's a track record that we bring to the table. So we will obviously not give you a projected margin, but I think we have the track record to be able to deliver margins ahead of expectations because of the way we run and manage our business.
Okay, Mr. Jejurikar, thank you very much for joining us. It's a pleasure having you with us here, sir, and good getting that. I mean, numbers have been looking
again,
good,
happy festivals to all of you.
Yeah, and Rajesh, just wanted to tell you that over the last 12 months or so, we get numerous calls saying, my waiting period is very, very long. Can you get the car a little sooner? We are as helpless as you. But good to see the kind of demand for your units. And as you said, you're increasing capacity as well. So wish you and your team all the best. And hopefully, I'll start doling out more number of cars.
I hope that answers the market, the competitive intensity and market share question.
Absolutely. There is so get in line, right? I mean, that's all I can do. Thank you very much, Rajesh. Appreciate it. Thank you. Well, so that's